yields. Rajesh Baheti, Managing Director at Crosseas Capital Services, is with us. Rajesh, good morning. Good to have you here. Sorry, I'm taking you away from your tennis. So you can play later. The weather is nice. So this STT hike, Rajesh, both the futures and options, first of all, it was not expected. 50%, 150%. What will this do, in your opinion, in terms of market impact?
So first, let's understand that the futures and options industry is now the financial equivalent of paan, masala, tobacco, alcohol, casinos. So if we're not expecting it, I think that's probably our fault. The government signaling is very, very clear. They don't want this. They think it's undesirable. The problem is they will tell you this, and mostly it is to raise revenue, because if it wasn't, they should have at the same time cut delivery-based STT to 0. If they had done this along with this hike, I think the market would have rejoiced it and said, yes, this is signaling. It's telling you that you don't want an activity of a particular kind, but you do want an activity of another kind, and we would encourage that. Unfortunately, we get one, we don't get the other.
But it can't both be true, Rajesh? The objective of this is on the speculation side, you have all those comparisons, paan, masala, tobacco, etc. On the other side, you don't want to do that to protect revenue because it's a tough year. I mean, I'm just saying.
But you saw that interview. They were clear in saying that this is not about revenue. I mean, it wasn't about revenue, and it was about signaling. Then I think a very strong signal could have been sent to the market by removing the extra STT you pay on delivery-based trades, telling the market, go ahead, take delivery, invest, and we're not going to tax you because...
No, I agree. I am saying they could not do that because they don't want to lose revenue while they want to do this. That's what I'm saying.
You're talking about 10,000 crores. What's the
I don't
on this? What's the,
no, I'm not.
Crores?
I'm just saying. Is it possible that both are true, this and that? Because you said, well, they're signaling it, but obviously it's not showing up in action.
Yeah, but if you're going to want to take 10,000 crores and take the market down by 6.5, 7 lakh crores, I think that's poor economics.
Rajesh, have you spoken to any high-frequency traders, arbitrageurs? What is the feedback that they expect? Because their margins are anyway razor thin. So what impact do you foresee on liquidity, on the behavior of HFT and arbitrageurs?
You know, the strategy of the government is to not break the rubber band, but keep pulling it and see at what point does it break. We don't know when this STT comes into play. We'll really know the structure of the market, how the market adjusts. But you can be sure it's going to hurt. It's going to hurt the high-frequency traders the most. But they are the ones that provide the liquidity. So, you know, if you think liquidity does not become a very important factor for FPIs to decide which markets to put your money in, I think there's a little bit of a disconnect in what the government wants to do and what could happen.
Okay. Hi, Rajesh. Good morning. Good to see you, Ben. How much does the cost effectively go out, you know, on a particular contract for futures as well as options? And there was some who were talking that higher volume shift to options rather than futures because of the STT shift now. Any view?
Futures was already like a very small percent of the options volume. If you actually saw the volume, it was anyway skewed in favor of options. It could just get unviable to trade either at some point. And so I don't know if this point has been reached or not, but at some point it will get unviable for professional traders to trade this anymore, which will have serious repercussions for liquidity.
Yeah. Got that. You know, you can, now again, I'm just playing devil's advocate here. There is one viewpoint that whenever, look at past instances, whenever STT was hiked, right? 2023, 24, etc. as well. It's not as if volumes took a large hit, or activity took a large hit, Rajesh. How would you respond to that?
So that's what I'm saying. You know, you're stretching the rubber band. I don't know whether this is the breaking point or no. So when the move actually happens and the STT does go up, we are there in the market. At some point, some people will pull out of trading. I don't know whether it's us this time or the high frequency traders. It's yet to be seen. But at some point, I think it'll become unviable. For sure.
From a customer point of view, you don't see this changing. This is what is reducing speculation is what this is aimed at, reducing or rather changing customer behavior, Rajesh? Client behavior or trader behavior?
I mean, if the client or the retail client behavior is to buy or sell some option and hang on to it for days and weeks till either you double your money or you completely zero out your position and lose everything, then it's not going to be a game changer. What it will do is it will make bid and ask spreads wider. And that's where the repercussions are for not only the retail trader, but for SBIs when they evaluate a market.
Rajesh, if we just step back and see the direction of the capital market taxation over the last couple of years, whether it's to do with STT this time, some time back it was the hike in LTCG. What does that tell you about what next, irrespective of what the intent behind it may be? But just the direction seems to be taxing more and more on capital markets.
I mean, generally, if you've seen from 2014, whether on personal income tax front, except for corporate taxes, where a fantastic move to bring the taxes down, on the personal taxation front, taxes have moved up. The surcharge on personal income tax is very high. The AIFs get taxed at 42%, which I think is killing that industry. So the messaging is very clear. The government doesn't think that the rich deserve any handholding, or the capital markets can be healthy on their own because of the growth that we are likely to see in this country. So I think the government is betting that 6% growth or 7% growth alone will take the markets up. They don't need any more support financially.
Yeah. Do you have exposure to any of these capital market stocks themselves, apart from your own trading, Rajesh, on the equity side?
Luckily, I'm in the capital markets. I think I don't want to add to the problems by having investing in capital market stocks. I do have NSE as a disclosure, but apart from that, I try to keep away, because if the business gets good, I will do better anyways. So I don't want to double down.
Yeah. No, absolutely. A point taken. You're already in it in that sense. Rajesh, thank you very much. Good speaking with you, and have a good day on the court. Thank you for joining us. That's Rajesh Baheti, and strong words and strong view.